Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for LandBridge Company, ticker symbol LB earnings. One of our members requested this, so here we go. We're covering a LandBridge Company earnings this morning. If you are a member of our channel and you do a minimum $5 super chat, first come, first serve, we will cover your earnings for you. So we're getting ready for the earnings. The earnings is in 25 minutes, so we've got a bit of time to prepare, and we are looking at the global market selling off again. So back down again, up yesterday, straight back down again. Remember, my position is so much higher now. It's over $300,000. So when the markets go up, it goes up a lot. When it goes down a lot. Same thing when people asked Warren Buffett, what does it feel like to lose millions of dollars in one day? And his answer was, I haven't until I sell. And the bigger your portfolio, the bigger the moves. And so, yes, another day of uncertainty. Another day of no one knowing what to do. It presents opportunity to buy dips. If you're trading in and out, it's a very risky game. I'm not doing it. I'm just simply buying more. So we're getting ready for the LandBridge earnings. We've got a bit of time. So let's prepare a few things. I want to put it out on... I want to put this out on our social media with some polls. There is a poll in the chat you can take part in right now. We've also got some premieres coming out as well this morning after all of this. On my walk and talk last night, you said you would watch them. I hope so. Otherwise, the members only live streams, we just can't do as many because if we're doing members only live streams a lot, which I want to do, and then you see me make the reviews and then you don't watch, it'll kill the channel and we'll start going backwards. So then that's why I have to do more public videos to bring in fresh audience. It's very, very important that if we're going to continue doing the members only live streams, a lot of them, like we're doing now, do need you to support the videos when they come out, even if you're just putting them on mute. So they get seen by our main audience, and then YouTube sends it out to a larger audience. All right, so what we're going to do is we're going to start off by, as we're waiting, I'm going to put this on our socials, so you might want to vote in the polls. So let's get to it. Let's start on our Blue Sky, then X. We do all the different mediums. So LB stock. I'll just keep it on this screen. Nothing to show you at the moment. LandBridge earnings call live now on YouTube, and join the investors. Okay, and let's put the link to the event. There we go, LandBridge. We've got 20 minutes to go, so we've got plenty of time to get all this done. Record walk last night, 4 laps last night. Absolutely brilliant. Really enjoyed that. Thank you very much. And you're going to love the investment I have made to make it even better. On Friday, I've got a piece of equipment coming tomorrow. So it might even be in tomorrow night, Friday night, but we'll see. Oh no, it won't be tomorrow Friday night because of the concert, but it would be Monday. Anyway, LandBridge, Martyn Lucas Invest. I'm just doing the socials for this event as we wait for the call to start. Keeping an eye on the overall economy. As you can see, sold off again and back up again. It's just the same thing over and over again. Martyn Lucas Investor. A lot of companies have been mass importing ahead of all these tariffs to try and get around it. So all the numbers are getting skewed. Everything that we know is just chaos. It's not an investment world right now. It's just a crazy, the OK Corral, a free-for-all. I don't like it. I'm not enjoying it. I'm doing it. I'm staying in. I'm buying the dip. I'm not enjoying it. It's not investing. It is investing, I suppose, but the overall structure of it all is just ridiculous. Anyway, it is what it is. So let me put my first post out. Okay, that's on LandBridge. Sorry, on Blue Sky, if you follow me over there. Let me do my X poll now. Here we go. I'm not going to show you what I'm doing right now because I want to keep it on here if new viewers come in and wonder what we're covering. LandBridge earnings is coming up in a few moments' time, and we don't want anyone to be confused what I'm doing just for the moment. LandBridge, there we go. Okay, let's do a poll as well. Putting the polls up. You can see all these if you follow me. I'll give you my X account. There's my X and Instagram. If you follow me there, you can see it all. So let me run a poll. Here we go. Is this a buy? If you just tuned in, we're doing LandBridge earnings. It's in 20 minutes time, 19 minutes now. Buy, hold, sell, or undecided. Is this a buy, hold, or sell? Buy, hold. I forgot what I normally do now. It's buy, hold, or sell, isn't it? That's it for you. Okay. So poll is buy, hold, sell, or undecided. Always have to have that one in there because you never know. Let me put that there. Right. That's now on X. So if you want to go and vote on X, I've just given you the link in the chat. Okay. There you go. And now I'll post this on Facebook. Okay. Post there. Post. We'll also put it on our Instagram. I've given you the link in the chat as well. Let me just put that there as well. Okay, there's Instagram. And we'll put it on Threads finally. There we go. Back to Facebook, and then make sure I put it on the group as well. There you go. Have to wait for it to post on the main page, and then you post it to the group. All right, there you go. Now I finished Instagram, done. You've got my link in the chat. I've just given you that. And there, that's done. All right, the last thing we need to do is check the feed. We'll come back in 3 minutes when it populates. It will provide it on the screen in the next 3 minutes. Right now, over to our community pages on YouTube. I'm going to do a poll. Is this a buy, hold, or sell for you? Okay, let's do an image poll. So it's buy, hold, sell, or undecided. There we go. Add the images. Okay, so let's go into there. So I'll be right back with you in a second now. There's the buy. There's the hold. There's the sell. And there's the undecided. And now post that. There you go. That is the poll for the event on the investor pages, the community pages on YouTube. All right. We've got 1.5 minutes before I can refresh the screen. Let's see how the markets are doing. Back down and up and down like a yo-yo. Just can't time the bottom. Let me come back to the comments. So, good morning. Stacey was here first. Round of applause for Stacey. Yay. Stacey was the first in the show today. Left the first comment. I'm loving it. Good morning, Martin. Hello, good people. Just a hint on one very good crypto. TARS AI ticker TAI. Wonderful stuff. Bring that to the attention of Sensei on Sunday on the crypto show, and I'm sure he would love to hear all about it. All right. Let me come back to my main page. Make sure we're good there. There we go. Thank you, Martin, for covering LB. You asked for it. Was it your request? Was it your request? LandBridge. Let me go to the list. Yes, I believe it was, wasn't it? Was it your request? Tomorrow's Broadcom. We've got BlackBerry. We haven't got any more requested earnings now. We're coming to the end of that now. You're very welcome, by the way, though. No worries at all. GoDB. I will fire up the old laptop and start watching those videos tonight. Thank you, Josh Monroe. Yes, I will. They're all ready to go. Well, they're not ready to go. I'll be finishing them off during this earnings call. They're uploaded. As long as they are edited, rendered, processed, uploaded, I can do the rest during the call. Today is also THXL ex-dividend date for LB. They will pay 1 cent. Is that 1 cent or 10 cents? Because you didn't put a 0.0. Great job, Martyn. Thank you so much indeed. Yeah, about the walk, yes. Martyn, at what price would you sell VU on your account? Or if you would turn to a steep downturn, would you only keep adding? Only keep adding. Only keep adding. I will not be selling. The only reason I would be selling, because I'm increasing margin, is if my business was going backwards. So my income on YouTube started to stagflation. If you talk of it in those terms, if I started going backwards, if I started getting less views, less money, earning less money, so I could the margin would never get paid off. If that started to happen, then I start selling. But otherwise, no. If you say you bought a one-man band setup, if you say you bought a one-man band setup and walk and talk concert, that would be awesome. No, my neighbors would hate it. No, I basically bought the harness for the pole coming out the front, so I can have my iPhone here, so my hands are free, so I can walk properly, and it will enable me to use a microphone as well. Anyway, good morning, everyone. My NVIDIA position is still terrible. I hope all this works out. Yeah, it's tough, isn't it? Do you have a price that you would have to sell? Do I have a price I would have to sell? Yeah, if the market goes down 25%. If the market goes down 25%, I would then, if we had another crash, we've already gone from peak to trough 6%. We've already had a 6% correction. It's quite dramatic. 6% from top and bottom of the S&P. If we go down another 25%, that'll be 31%. Then I would get margin called. Then what will I be doing then? Well, then I'll be getting some, hopefully that won't happen by the 21st of March when I get paid to add some more money to bring it down again. But if it did happen before then, I would get the money on a credit card because I know the money's coming on the 21st of March. I don't want to sell when I'm down. You got to make sure that you can remain in the game as long as possible. I don't believe it's going to go down past that. That'd be 32% from top to bottom. That's I don't see that happening at all. Right, here's the earnings call. That's the music. We've got it there on the screen. Hello, guys. Vadim Kanif, good morning to you. There's no more buying the dip. I'm tapped. I wish these politicians would get their act together. I'm right with you. It's just awful. It's it's all very well saying play games with the market and tariffs. This is people's real savings. Real people are investing in the stock market, losing all their money, getting margin called, have no pensions. This isn't good. Instability in the markets is not a good thing. This is still, how much did you pay for the stock? I'm not sure what you're asking me there, Iberian Wolf. What time is the White House crypto party tomorrow? It looks like it's 12 o'clock, 12:30. I'm still waiting for confirmation of it, but I'll be covering it. Bought my second full share of VU yesterday. Congratulations. Yes, it was, Iberian Wolf. Ah, right, okay. Good afternoon. Just received my mug. Lovely stuff. Good morning, Stanislav. Good morning to you. Good morning to you. Great to see you. One of our star members here. I had requested Broadcom earnings. Did I miss it? No, Broadcom earnings is tomorrow. Let me just check the time, because they do bloody move, don't they? Broadcom. It's scheduled for tomorrow. Broadcom. Whoops-a-daisy. Broadcom. Available today after hours. You're kidding me. March the 6th. March the 6th at 4 p.m. March 6th at 4 p.m. is today. I'm going to have to do that now after hours. Okay. It's after hours today. It's after hours today. Bugger me. That's a pain in the ass. Okay. 4 p.m. So, here we go. Broadcom. 3:30. 4 p.m. All right, Broadcom, that's there. How long have I got? 10 minutes. Avgo, AVGO, Avgo. Here we go. This caught me out. All right, never mind. Never mind. Okay. Thank you. I'm glad you said check it. Well, whatever you said, I checked it anyway. But I'm glad I did check it. 7:52. 7:52. 7:52. All right. Okay. Broadcom, ticker symbol AVGO, earnings call, very, very important earnings call. This one, particularly for all invested in AI and tech and the overall market, seeing them crash like they have been recently. We are covering the earnings call today, March the 6th, after hours today. Join me at 3:30 p.m. Central Time for the earnings of Broadcom, one you cannot afford to miss. I will give you the link above my head, down below in the description, also pinned to the comments. You will find the link for this event. You cannot afford to miss this one, I don't think. Over here, I shall put the Broadcom, the Broadcom event, 3:30 Central Time here on the main channel. And down here, I'll put the Broadcom playlist. Join us for the Broadcom earnings live after hours, after the closing bell today, March the 6th at 3:30 Central Time. Until then, take care of yourselves and each other. Right, Broadcom. That was Stacey Bailey's request, one of our members. That is in the calendar. Okay, LandBridge, we're good to go. All our polls are out. Let me refresh LandBridge. We've got 8 minutes to go. Let me check the audio. There it is. 8 minutes to go. We're keeping our eye on LandBridge this morning. Overall markets are in extreme fear again. Chaos everywhere. Driving me at the wall. Everyone's getting tired of it. I'm tired of it. I requested Broadcom. It's in there for you. Nice kind time for a refreshing cup of tea. Have we got time, James? Okay, let's bring on the tea, James, in my special Martyn Lucas mug. If you've not got one, martynlucasshop.com in the chat right now. There it is. James, cheers, mate. Cheers. Thank you very much. Me and James have a little tradition, and it's a good one. I like it. Oh, lovely. Absolutely lovely. Okay, here we go. How long we got to go? 5 minutes. So, after LandBridge, we've got some videos premiering this morning for you, some reviews of some new stocks that you might like to take a look at. They're premiering. They're all on the channel. You don't see them yet because I haven't launched them. But during the call, I'll be finishing them off. So you'll see me like that all over the screen, looking everywhere as you're listening to the call. I'll be doing 1,000 other jobs at the same time. So please tap the like button if you just come in and consider subscribing. We've got 5 minutes to go before the earnings call begins. Please smash the like. That's right, James. Lucas Aid family. Yes, you do have to pay attention to where you are stepping. We don't need to stumble on the show. On the show, yes, indeed. Very true, Jenny. Hello, good morning. If a good company, of course, VU is, and it goes down. If a good company, of course, VU is. It's not a company. It's an ETF. Remember that, Jenny. And it goes down. It will almost come back eventually. If company is solid, selling while down does not seem to be a good idea unless extenuating circumstances. That's right. But there shouldn't be extenuating circumstances if you have planned, if you've overbought, over-leveraged, not allowed for unexpected expenses and so on and so forth. But it is difficult, though. You do take risks because you don't know. What if the market did go down 50% in the next 5 minutes? It can happen. It's extremely unlikely, but it can happen. Sorry if I mess up. You can skip it for just set it on the record. Make a video later. No. It's happening. No. It's happening. I should have my 2-month badge later. Wonderful, Jerry. You've got your 1-month badge now, Jerry. If you are on Discord, I can upgrade you now, and you can get access to all the free training and talk to all the team. If you're not on Discord, give me your username, and I'll do that later on at the end of the stream. Or just have Vaz or Sensei do it. Delegate. No, that's all right. I've got it covered. Don't worry about that. I've got it covered. Yes, cheers, Martin. Don't forget to tap the like button on your way in. Thank you, Vanessa. All right, 3 minutes to go. What do you think of Tesla today? Tesla, terrible. Elon Musk is upset everybody, basically. Germany refused to buy you the car. If you want the award for the worst CEO in the world, like the best creator, the best inventor, the best get-it-doner, but the worst CEO ever, he's destroying his own company. Look at it. Germany won't buy the cars. Canada are putting 100% tariffs on. They don't want to buy the cars. We've got people setting fire to Cybertrucks. It's ridiculous. Absolutely ridiculous. It's like, I don't understand this style of politics. I've got to be honest. I'm getting very frustrated with all of this. I want it to go away. I just want normality to come back in. It's ridiculous. How can you buy Tesla? I'm buying it through the S&P, so technically I suppose I am, but it's just ridiculous. Who wants this? It's instability. It's chaos. Living in a world of chaos. Hi, Martin. What do you think of Tesla? Is it too much? Is it so much nicer to be asked to tap the like button? All you was say smashing the like button. Smash the like button. Well, we do say that sometimes, don't we? Smash the like. Ooh, yeah. We sorry about that. Sorry, that's just the term it's used. I don't mean it. Oh dear. Mandarin's not happy with me now. Good afternoon. Bring it on tomorrow. Bitcoin, yes, tomorrow live on the show. We'll be covering it. Good morning. Good luck, everyone. Keep safe. We got 1 minute to go. Yeah. Okay. Earnings call coming up, and then I'll be posting all the events for after hours today as well. Oh man, what a situation this is. It just never ends. Living in a world of noise and chaos. I don't think it's very pleasant. Is anyone enjoying this? I don't know. I don't think anyone's enjoying it at all, are they? I'm not enjoying it. It was great to see it up yesterday and then straight back down again. I thought we had some relief, but we don't. People just don't trust anything now. It's dangerous. You could start to consider, leaving the market altogether, and that's what people are doing. They go, you just don't know what's going to happen next. It could go down 50%. It really can. But there's been this drama all through history. This is just, we're living through our time. It happens. So we've got to be prepared to. We've got to be prepared for this. This is just the way it is. Being an investor, particularly if you're leveraging and using margin and you're taking, extra risk, it's a difficult situation. It ain't easy. Right, let me bring on the audio. There's the music. So I'm listening in. Expect to be 1 or 2 minutes late for the LandBridge earnings. That's typical. LandBridge, here we go. Remember, the price of the market is not the performance of the companies. This is sentiment. This is emotion. You know, the businesses are still doing business. So we're listening in now. I can hear the audio in the background. I'll bring you LandBridge the moment they bring it to us. Or this could be it.
Thank you for standing by. Welcome to the LandBridge fourth quarter 2024 results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press star 1. Thank you. I'd now like to turn the call over to Jason Long, Chief Executive Officer. You may begin.
Good morning, everyone, and thank you for joining our fourth quarter and fiscal year 2024 earnings conference call. We continue our exceptional growth trajectory in the fourth quarter of 2024, growing revenue 109% and adjusted EBITDA 108% year over year, with an 87% adjusted EBITDA margin. For the full year ended December 31st, 2024, we grew revenues 51% year over year, adjusted EBITDA by 55% year over year, and achieved 88% adjusted EBITDA margins. As we reflect on our first 6 months as a public company, it is clear that our active land management strategy is working as expected to create value for our shareholders. 2024 was a year of expansion for LandBridge. We more than tripled our land holdings, growing our total surface acreage from approximately 72,000 surface acres to approximately 273,000 surface acres, with 53,000 of those acres acquired in the fourth quarter alone. In December, we acquired 46,000 largely contiguous surface acres known as the Wolfbone Ranch, which expanded our position in Reeves and Pecos Counties, Texas, a highly strategic location for oil and natural gas production that also provides us access to the Waha natural gas hub. As part of the acquisition, LandBridge secured a minimum annual revenue commitment of $25 million for each of the next 5 years from BTX and its affiliates, which includes surface operations, brackish water, and royalties from produced water handling. We've continued that momentum into 2025, closing on an acquisition in February for approximately 3,000 acres contiguous to our current land position in Lee County, New Mexico. This acquisition increased our current acreage position to approximately 276,000 acres. Additionally, we see significant future growth opportunities from digital infrastructure, renewable energy, and commercial real estate. Subsequent to the quarter, we executed 2 notable agreements. We executed a development agreement with Western Midstream Partners LP, providing a surface and pore space solution for a portion of the recently announced Pathfinder produced water pipeline and related produced water handling facilities on our East State Line Ranch. Additionally, we executed solar energy project development agreements with affiliates of Desiree, a leading developer, owner, and operator of renewable energy projects. The agreements include 6,700 acres in Andrews County, Texas, and Lee County, New Mexico, for which Desiree has submitted interconnection requests to the Southwest Power Pool. We're excited to be able to announce these 2 agreements that speak to our continued success to actively commercialize our land. We remain confident that digital infrastructure will be an important growth driver for our business moving forward. The rapid development of AI and related need for data centers, among other high computing power demands such as crypto mining, will continue to require access to cheap power and water for cooling. Our acreage in West Texas is well positioned to support these requirements and will remain actively engaged in seeking potential opportunities with these interested parties. As a reminder, in November 2024, we officially signed our first lease development agreement for the development of a data center and subsequently received an $8 million payment in December. The payment is a one-time non-refundable deposit for a 2-year site selection period with the potential for a data center to be constructed within 4 years thereafter. The success of our IPO, the increase of our surface acreage, and the signing of new commercial agreements speak to the momentum of our active land management strategy. Scott, now over to you.
Thank you, Jason, and good morning to everyone joining us today. To echo Jason, we're pleased with the results this quarter, proud of the milestones we reached in 2024, and excited for the promising growth opportunities ahead in 2025. Our fourth quarter revenues increased to $36.5 million, up 28% sequentially and 109% year over year. Our full year 2024 revenues increased to $110 million, up 51% year over year. Sequential revenue growth for the fourth quarter was driven by surface use royalties and revenues, which increased 54% sequentially, including the $8 million payment related to the data center lease development agreement Jason mentioned, as well as increased produced water royalty volumes. Revenue from oil and gas royalties also increased 54% sequentially in Q4, driven by an increase in net royalty production. Resource sales and royalties declined 28% sequentially, which is driven by a decrease in brackish water sales and royalty volumes. As highlighted the past few quarters, we continue to shift our revenue mix towards non-oil and gas royalty-based arrangements to further insulate our exposure to commodity price fluctuations. In the fourth quarter, non-oil and gas royalty revenue, including surface use royalties and revenues and resource sales and royalties, accounted for nearly 90% of overall revenue, approximately flat from the prior quarter and up about 20% year over year. For the full year, non-oil and gas mineral royalty revenue represented 85% of total revenue, an increase of more than 13% year over year. Importantly, our results in 2024 validate our ability to capitalize on growth in the Permian Basin without incurring meaningful operating and capital expenditures. This key feature of our business model translated to an adjusted EBITDA margin of 88% and free cash flow margin of 61% in 2024. In the fourth quarter, we delivered $31.7 million of adjusted EBITDA, up 27% sequentially and 108% year over year, with an adjusted EBITDA margin of 87%. For the full year ended in 2024, we delivered $97.1 million of adjusted EBITDA. We also generated free cash flow of approximately $26.7 million and a free cash flow margin of 73% in the fourth quarter. And for the full year ended 2024, we generated $66.7 million of free cash flow. As noted last quarter, our free cash flow in 2024 was impacted by non-recurring IPO-related expenses and lease termination costs. Our Q4 free cash flow margin of around 70% is more in line with our long-term expectations. Additionally, we'd like to discuss our surface use economic efficiency, which we define as total revenues less oil and gas mineral royalty revenues divided by the applicable acreage. This metric for our legacy 72,000-acre position has increased from $465 per acre in 2022 to $724 per acre in 2023 to $1,018 per acre in 2024. We think this speaks to our unique ability to significantly increase cash flows on our acreage over time through our active land management strategy, and we believe similar growth potential exists on the surface acquired in 2024, again, without any meaningful cash outlay for capital expenditures. Moving forward, we will continue to execute on our capital allocation priorities, which include pursuing value-enhancing land acquisitions with a focus on underutilized and under-commercialized surface. As a reminder, we seek to acquire surface that is not just financially accretive, but also offers long-term growth potential that mirrors our existing portfolio. We are also focused on maintaining a strong balance sheet to maximize financial flexibility over time. We ended the year with $385 million of debt outstanding under our credit and debt facilities, which is up from $281.3 million at the end of the third quarter of 2024. We updated and amended our debt facilities in part to fund our recent acquisitions. As part of the amendments, the requirement for quarterly amortization payments was removed, which will improve cash flow and liquidity to allow for more flexibility and optionality for future capital allocation alternatives. As a result of these updates, we ended the year with total liquidity of $107 million, including cash and cash equivalents of $37 million and $70 million available under our amended revolving credit facility. Finally, similar to last quarter, we've declared a cash dividend to shareholders of 10 cents per share. While we will revisit the amount of the dividend on a quarterly basis with our board, we will continue to focus our capital allocation strategy on a robust pipeline of attractive acquisition opportunities available to us. Looking ahead, we are reaffirming our previously announced guidance for 2025. For the full year, we expect $170 to $190 million of adjusted EBITDA, driven by incremental contributions from our recent acquisitions, initial solar facility contributions to surface use revenues, and growth of surface use royalties through higher produced water volumes, among other factors detailed in our press release. In conclusion, we delivered another outstanding quarter to close out a year of strong growth. Our momentum remains promising, and we look forward to advancing development on our surface acreage in partnership with industry-leading developers and operators. And now we'd like to open up the line for questions. Operator?
Thank you. We will now begin the question and answer session. If you would like to ask a question, please press star one on your telephone keypad to raise your hand and join the queue. If you would like to withdraw your question, simply press star one again. Your first question comes from a line of Jackie Koletas from Goldman Sachs. Your line is open.
Hi, good morning. Thank you so much for the time. First, just wanted to start, you called out your ability to increase surface use economic efficiency year over year. Just looking ahead, where do you think this metric can go from here as you see the growth across your footprint?
Yeah. Hey, good morning, Jackie. It's a great question. We haven't defined a hard cap by any means right now, but we think there's still a lot of room to move that up. And just to quantify that a bit, we can look at a section or 1 square mile, 640 acres as a good example. And, in that section, we can fit, a one produced water handling facility that can generate $1.5 million per year at that facility in royalty revenue. But then on top of that, there's a lot of acreage that isn't used by just that 10-acre produced water handling facility site that we can do quite a bit with. I'll give an obvious example. We can fill in, call it that extra space with opportunities like solar, similar to the opportunity we announced on this earnings release, and that could add easily another $500,000 plus, across that section. So to think we can do $2 million per section or per square mile, which equates to a little over $3,000 an acre, I would say is very, very achievable. And that's not giving credit to some of the more, call it economically dense opportunities, such as sand mines, such as digital infrastructure, and so on. And so a lot of running room left. Again, I think that 3,000 plus is a pretty good bogey here in the near term, but we definitely don't think that's the hard cap.
Got it. Appreciate it. And then just following up, on your agreement with Wes, can you provide just more details on the size and the expected upside from that contract? And then are there more third-party agreements that you can win from here beyond, WaterBridge in general?
Yeah, good question. So to start with the West piece, the agreement is a bit bespoke, just given the fact that we are a portion of the solution there, albeit we think that we're one of the critical pieces of the solution. In terms of just the economic impact, we expect to get just call it low single-digit millions in terms of surface damages, rights of way, and those types of payments here, over the next 12 to 18 months as they work out the construction of that asset. Once everything is operational, we could see high single-digit millions to call it low to mid-teens of royalties. It really just depends on the total volumes and the source of those volumes. But I would say a good deal for us, a good deal for Wes. We're happy to partner with them on this, and I think there's a great upside for both of us here. Now, as it relates to the second part of the question, we are in process in talks with a lot of other folks out there, a lot of other third parties out there. And so, this Wes agreement is certainly not just call it a one and done. Obviously we have a lot going on with WaterBridge, but there are a lot of other folks in the water infrastructure space and the upstream space that find both access to our surface and through our surface incredibly valuable. We continue to have those commercial discussions and hope to share more wins later this year.
Well, thank you. I'll leave it there.
Thanks, Jackie.
Your next question comes from a line of Charles Meade from Johnson Rice. Your line is open.
Yes. Good morning, Jason and Scott. Jason, I want to go back to I want to go back to some of your prepared comments on the data center. First, it was great, and you guys have been talking about this for a while. It's great to see that $8 million in December. But can you? I think if I heard you right, you said you've got a 2-year site selection period and then a 4-year construction period. Can you give us a sense of the what the roadmap is from here, what the milestones would be for future revenue, and whether there's going to be anything when we exit that 2-year site selection period, and then what the along the lines of what Scott was saying, what the kind of annual revenue opportunity is perhaps after that 4-year construction period.
Yeah. Hey, Charles, I'll tackle this one. So as we've mentioned previously, this 2-year option period, or site selection period, kind of in the process of that right now. The voiceover to us has been expectations likely closer to 12 to 18 months, but they do have that full 24 months. After that site selection wraps up, we start to see called a ratchet of cash flows that work to our benefit. And so it'll start with a smaller, more subsidized lease component as they kind of stage for construction. But once they actually break ground on construction, we would expect to see that full $8 million a year in lease payments for that 2,000 acres. Now, as different phases come online, that's when we would expect to see incremental revenue streams to include the profits interest on the power generation, as well as potentially any water sales that are needed for cooling either the power generation or the actual data center itself. But as you alluded to, it is a multi-year timeline. These are large capital projects. And so, I think we're in a really good spot right now with everything moving forward as contemplated. But, I guess the takeaway is we would expect to start seeing more revenues from that likely next year and seeing those continue to ratchet up over the subsequent years through construction as different phases of operations come online. And I think finally kind of targeting again that 1 gigawatt being probably a few years after that first phase is online.
Got it. I know. Thank you for all that detail, Scott. I know you talked about it before, but it's good to get the refresher.
Yeah, of course.
The Wolfbone Ranch. Can you talk about what how that integration is going and what, if anything, you've learned and any kind of opportunities that you may be aware of that you weren't when you struck that deal?
Yeah, I mean, from an integration standpoint, the beauty of Surface and again, not being necessarily an operating company is the integration component is actually pretty light other than just some back office work. And so, that has gone seamlessly. I would say kudos to both, our accounting and legal teams as well as those over at VTOL and VTX. It was a very smooth process there. But I mean, as we kind of think through opportunities, I think what we've found is just a lot of the not necessarily the commercial underwriting, but the investment thesis that went into that acquisition. So proximity to Waha, large contiguous blocks, access to various infrastructure,
Highway frontage,
all of that, is coming to fruition very, very quickly. And we've gotten quite a bit of interest, and as such, are having a number of conversations right now for access to Surface because of those various resources. So, obviously, having just closed on that a couple months ago, we're still kind of in the early innings here, but I would say it's somewhat off to the races, and we've got great traction, out of the gate here, and again, hope to be able to share some of the wins later this year as a result of that acquisition.
That's great detail. Thanks, Scott. Thanks, Jason.
Yeah, thanks, Charles.
Your next question comes from a line of Derek Whitfield from Texas Capital. Your line is open.
Good morning, all, and congrats on an impressive first year as a public company.
Thanks, Derek.
Thank you.
First, I wanted to start with the land strategy on page 4. Previously, you were building a wall around the state line for the benefit of advantage water capture as Northern and Delaware water disposal needs grew. Could you speak to the opportunity you're seeing with the BLM SLO leases in Lee County?
So on the BLM and state lease stuff, majority of those acreage positions that we've bought, obviously, were very strategic in the fact that it gave us the ability to bring some of our supply water from Texas up into New Mexico, as well as the produced water piece. So really leveraging on the fee pieces that we bought in and around those leases is where we've been able to get some really good tailwinds.
Yeah, I think it's important to note that we're not necessarily underwriting any value to those leases when we work through our M&A strategy. Now, just by nature of, call it, the New Mexico landscape, a lot of this fee surface includes some of these leases, so you tend to be able to capture those in one foul swoop, call it. But when we think through, like, where is the real value proposition in these acquisitions, it is going to be largely on that fee surface. For the sake of the map, we wanted to call that out just to be transparent with folks.
Yeah.
Terrific. And then perhaps bigger picture question on data centers for my follow-up. We've seen a trend of data centers being built in more remote locations like Stargate. And thinking about the progression of discussions with your customers, how are you seeing that picture unfold for more data centers in the Permian? I guess directionally, are you guys more bullish than 3 to 6 months ago?
Take this one, Jason.
Yeah, look, I think that we definitely are, I think, more bullish. I think that timing is everything here. Once this first domino falls, I think there'll be a lot more to come with it. Power is a big piece of this, and obviously access to surface, access to the grid, access to gas are all very important pieces of the puzzle. So look, I think that the data center hyperscalers are definitely getting more comfortable with these remote locations as we've seen on the Stargate side of things. So yeah, we're very excited about the opportunity. Our position and our surface gives us, really good running room as we have these conversations.
That's great. Thanks for taking my questions.
Yep. Thanks, Derek.
Your next question comes from a line of Alexander Goldfarb from Piper Sandler. Your line is open.
Hey, good morning down there.
Good morning, Alex.
Hey, morning. Just a few questions. First, you guys are certainly blessed with a great cost of capital in your equity, but you also talked about restructuring your credit facility, I think, to eliminate amortization, go to IO. So I guess my question is, as you guys look at the landscape, certainly the market is placing a premium in your stock for data centers, but those deals take a lot longer cash flow wise to materialize versus water, solar, et cetera, that seem to be much sooner in monetization. So how are you guys thinking about the projects that you're looking at from a cash flow perspective versus the funding side where the market is paying a premium for the data centers, but those take longer?
Yeah, I think that it's a good question. I think, you're spot on. I mean, the market is definitely leaning into the data center theme, not just for us, I would say more broadly to anyone that kind of touches at this point. The point I always make when folks bring that up is first, I think we're in a fortunate spot where that opportunity is very real for us. And we're obviously working through that. And we've discussed that quite publicly, but totally insulated from that data center narrative is this core oil and gas story, or I'll call it energy infrastructure and land story that you alluded to, that provides just substantial growth here in the near term. And I mean, we talked to the surface use economic efficiency metric, the growth there, spoke a bit about where we think that could go. And I think it's important to remember all of that is very achievable, outside of the data center narrative, which is only going to provide, call it further uplift as those come to fruition. And ultimately, when we think through our strategy and the action plan on our side, it's all of the above. I mean, I think we've got these very real opportunities to grow cash flows here in the near term that, again, cost us no capital, that we are going to continue to pursue. Now, we're trying to be mindful about the opportunity cost of certain areas of our surface where, we think data centers could be best suited relative to some of the other opportunities. But at the end of the day, I mean, there is a lot of runway we have out there on the surface today for opportunities outside of data centers, and we're going to continue to push on those, and those will be the driver of the growth that we expect to see here in the coming, couple of years. The data center, call it tailwinds, are very real, and we think, 3, 5+ years down the road, all of that will start to get layered on to the successes that we achieve, in a lot of these other themes, a lot of these other investment opportunities. And so, I tell folks it's great because, we can increase, or we believe we can increase our cash flows by orders of magnitude outside of data centers. And I think we're executing on that. We're proving we're executing on that. And there's a lot of runway left. The data center story is additive. And so the combination of those two things, I think, makes this a very, very powerful story in the market, which is why the market's received it the way it has, and it's on us to continue to execute on both fronts if we want to hold our ground here.
And then along those lines, your funding, do you think that you'll go back and raise more equity? Or are you planning to use debt? Like, what should we be modeling for capital raises for this year?
Yeah, I mean, I think, if the right opportunity presents itself, we would raise equity. I think that said, we obviously generate an immense amount of free cash flow. I think keeping the balance sheet healthy is a priority. I mean, we're not afraid to put a little bit of leverage on there when it makes sense, but I think keeping a sensible balance is probably the best approach here. I mean, we're in a very healthy position, not just from a leverage standpoint, but just from a debt service coverage standpoint, and we want to make sure it stays that way. I mean, that will give us the ability to navigate, any volatility or risk that may come up in the future that's unforeseen at the moment. We like that. But for us to issue equity, it's got to make sense. It's got to have, the acquisition opportunity needs to have a growth profile that we think, mirrors our own in attractiveness. And it needs to be a story that we can go out and tell the public, that, look, this is why equity made sense in this context. And, there's no one size fits all. I think it's really going to depend on the situation, but ultimately maintaining a prudent balance sheet, making sure we're not diluting folks unnecessarily, but ensuring that we're staying kind of responsible in the full context of the company and continuing to drive growth. All of those aspects are top of mind.
Okay, and if you'll just one more question on the water needs for the data centers. And forgive me, obviously coming from real estate side, not an oil guy. The brackish water and the water that you guys take from others who are drilling or fracking for oil. Does that brackish water, can that be converted to use in cooling data centers, or do data centers require pure, fresh, first generation water, if you will?
Yeah, good question. So you've got just brackish water, which is not necessarily the same as produced water. So you've got your brackish water wells out of the ground. You've got produced water, which is coming up with the oil and gas. I think the latter certainly would require more treatment. There's likely to be some level of treatment for either, most definitely with produced water. And so I don't want to give the impression it's you just connect the pipe up to the data center and it's good. I think there would be some costs associated with getting that water to the quality that's needed. And all of that, is kind of taken into consideration as a lot of these data center developers and operators work through their diligence and underwriting. But I think that said, where we have a big advantage in West Texas is we have an abundance of these resources, both in terms of brackish water and produced water. And while there may be some incremental costs associated with treatment, there isn't, a large metropolitan area that you're competing with for these resources. And I think generally speaking, that is very attractive. Jason, you want to add?
Well, one thing to be clear is that cost would not be something that LandBridge would fit.
Great point. Yeah. Great point. Yeah.
Okay. Thank you.
Yeah. Thanks, Alex.
Your next question comes from a line of Kevin McCurdy from Pickering Energy Partners. Your line is open.
Hey, good morning, Jason and Scott. My first question is on the macro outlook and the impact on your business. Oil prices have kind of taken a hit over the last week. What oil price and corresponding level of activity is built into your 2025 guide, and how sensitive do you expect your EBITDA to be to oil prices this year?
Yeah, good question, Kevin. Good to hear from you. So no meaningful ramps whatsoever built into our 2025 guide. All of that's based on firm guidance from operators we have. Both from the WaterBridge side and others. And, I think generally speaking, as it relates to commodity price sensitivity, there would need to be a pretty massive swing to the economic potential for the Delaware Basin for that to call it move off track. Outside of our small minerals position, which is, we expect to be sub 10% of our business this year, we really don't have any meaningful commodity price sensitivity. So I would say, in summary, as long as the, commodity prices kind of hold to a point where producers continue with their development plans this year, as kind of spoken to the public, no real impact on us.
Great. Appreciate that detail. And thank you for, the earlier comments on the Western Midstream EBITDA impact. I wonder if you could share the same thing for the newly announced solar agreement, looking for any EBITDA impact and the timing.
Yeah. So for those deals, it takes somewhere between 2 and 3 years to get through the permitting and development. In that interim period, we get, a smaller, we call it option fee, development fee, something to that extent. But 2 to 3 years down the road, once that comes online, we would expect a project like this, about 7,000 acres, 550 megawatts, to contribute, call it mid to high single-digit millions of cash flow per year.
Great. Thank you.
Yeah. Thanks, Kevin.
Your next question comes from a line of Teresa Chen from Barclays. Your line is open.
Morning. You have been very busy with a flurry of activity within the last year, both on the organic and inorganic front. I wanted to ask on your M&A outlook from here, if you could just remind us, how fragmented is the market at this point, and are there still many areas of desirable surface acreage left near your footprint that would fit well within your portfolio?
Yeah. Hey, good morning, Teresa. We have been busy. No, I think to answer your question, there's still quite a bit out there. And I think that's, I alluded to that in the prepared remarks, from a capital allocation standpoint, M&A continues to be by a wide margin the best use of our capital. Generally speaking, the landscape is still very, very fragmented. There are still a lot of opportunities out there. We're in talks with a number of those right now. I think, there is a real benefit that we bring to the table, particularly in opportunities where the surface owner may own the underlying minerals and wants to encourage more development activity on that surface. That's something we can bring to the table. Or in situations where a seller may have, tax considerations, the ability to do, a more tax-advantaged deal via our public currency is also another advantage that we have. And so, we continue to look at all the tools that we have to execute on our M&A strategy. We think that, again, the pipeline is very robust right now. We think there's a lot out there that makes a lot of sense and is incredibly additive to our platform. So we will continue to pursue those.
Understood. And on the topic of surface efficiency for the assets already within your portfolio and getting to that incremental 3,000 per acre target, understanding that some of it will be relatively capital light and some of these opportunities might be more involved. But when we think about the average going forward, how much CapEx do you expect to deploy in order to realize this target?
Yeah, I mean, just as a reminder, we don't do any of the developing of any of these assets whatsoever. I think for this upcoming year, we had expected somewhere between $1 and $2 million of CapEx total, and that's just kind of nickel and dime things on like trucks and other kind of field assets that we need just to manage the business. And so the beauty of the business model is, we acquire surface. We'll go through some of the efforts needed to make that surface commercially viable. That typically does not involve any capital. And then we go out and we try to drive business to that surface, from other folks looking for sophisticated landowners in the right areas who know how to work with them. And that has gone very, very well for us. And that has allowed us to drive that surface use efficiency metric on that legacy position, up more than 100% in a couple of years. And like I mentioned earlier, we think that is a very replicable growth strategy on the rest of our surface. And so, there is a very long runway for us to continue to drive growth on the position as it exists today. Like I mentioned, we think that M&A is only going to be additive and going to help drive that growth. But the point I'd make is, outside of acquiring surface, all of that growth does not necessitate CapEx, which is, again, the beauty of the business model here.
Thank you.
Yeah, thank you, Teresa.
Your next question comes from a line of Roger Reed from Wells Fargo. Your line is open.
Yeah, good morning. Let me take a slightly different tack here, just with the Texas legislature in session and some of the water issues are on their agenda. We don't know exactly where it'll shake out, but is there anything you're watching there in terms of regulation that would be potentially enhancing for you or create an opportunity? It kind of ties into the earlier question on, what kind of water you need for a data center, because I understand some of the legislation or proposed legislation is about recycling water as opposed to just, permanent disposal underground.
Yeah, great question. We 100% are watching everything that's going on. Obviously, it not only potentially could be a benefit for LandBridge, but also the same with WaterBridge on the WaterBridge side as well. As you think through the recycling piece of that, which our surface position gives us a really good opportunity to take advantage of that opportunity, right? So you need access to large contiguous surface to create these recycling ponds and basically centers. So yeah, I mean, we do think it's a great opportunity, and we're watching it extremely closely.
And then one of the other things out there was, and this gets back to the issue with some of the minor earthquakes out in West Texas, disposal of water from neighboring states, which in this case would obviously be New Mexico. Is there anything that you're looking at you might have to do differently or that would force the industry to be more likely to lean on LandBridge in order to deal with produced water from New Mexico?
Yeah, I mean, that has been one of our biggest thesis from the start, right? Is taking a lot of this water out of New Mexico, where historically it's been handled in deep injection, which in our view, and I think in the regulatory body's view, that's what's causing a lot of this seismicity, and actually getting that out of basin. That's one solution, but also just spreading out that injection in whole, and having access to this large contiguous surface gives us the ability to give people like Wes, and that's a prime example with this recent deal we did with Wes, give them the opportunity to spread that injection out and bring that water from New Mexico. We've got that opportunity with every other third-party water provider out there as well.
And then just as a follow-up on that, are you seeing any change in what your costs are or what your revenue potential could change as a result of, call it regulation, legislation needs to spread out? I mean, is that impacting at all what you are able to charge per gallon, per barrel, and then think about that on the revenue per acre that you were talking about earlier?
Yeah, obviously we have no costs associated with it. I do think that access to good pore space that's spread out and can be handled in a sustainable way, the price of that I think will go up over time. We have seen royalties increase over time as you have access to this pore space. So we feel like we're in a really good spot, and we continue to be optimistic as we think through adding to our portfolio of acreage, being very mindful of pore space going forward.
All right. Thank you.
Thank you.
Your next question comes from the line of Sean Milligan from Janney. Your line is open.
Hey, good morning, guys. Thanks for taking the questions. On the 2025 guidance, I was curious if you'd be willing to provide any guardrails around kind of expected produced water volume growth, that's embedded in that guidance range.
Yeah. Hey, good morning, Sean. I can talk through a high level here. I think the way to think about it is, with the inclusion of the Wolfbone Ranch acquisition, which wrapped up at the end of 2024, that'll put us, call it, just over 1 million barrels a day, kind of low millions. Through the course of the year, we've got a handful of projects coming online, two of which we've spoken about publicly, so I'll reiterate those. The first is WaterBridge's construction of the BPX Kraken line that will come online in the end of second quarter, and that will add meaningful volumes, and we've talked to that a bit. That has been published in a press release, so I won't go over the details of that, but that's going to be fairly additive from a volume perspective towards the end of second quarter. And then the second piece is there are a number of new assets coming online on our legacy surface position that will also be used to handle Devon volumes that are flowing today that are being diverted off of their legacy position. And so, I would expect to see a pretty meaningful step change in produced water volume starting to hit in second quarter, but really fully materializing in third quarter. But I would say it's very easy, relative to the call it the million or so barrels a day today, to see, low to mid double digit, call it, growth in those produced water volumes through the course of the year and kind of exiting 25.
Great. That's really helpful. And then on the solar side, I think previously you had talked about kind of receiving prepayments. Those had been pushed to 2025. I guess I was expecting those to sort of be in line with what the data center payment was in the fourth quarter. Is that still the right way to think about those payments in 2025?
Yeah, great question. So you didn't ask this, but I'll clarify an obvious point that the Desiree deal that we announced alongside earnings is different and additive relative to the solar opportunity we've spoken to previously. So that we are in the process of evaluating different proposals on that right now. I've spoken previously about the call it the lack of, call it, conformity around how those proposals will look. Everyone or each of these developers and operators will put forward some upfront consideration and some recurring rent effectively. And it is our job then to go through those proposals and determine what presents the best value for the company. Now, we would expect to receive those upfront milestone payments this year. From a total size perspective, it's about, you're thinking it the right way. It's probably $8 to $10 million, this year. But I kind of caveat that a bit with what I said initially, which is, we will not favor the proposal that has the most cash up front. If we get a situation where there is a smaller upfront but a much larger residual over an extended period of time that would just generate more value for the company, we would of course go with that. But that's something that, as the dust settles and we choose a path forward, I'll be transparent to the market about, just so folks can, adjust their forecast and expectations accordingly.
Okay, great. But just to confirm, so the DESRI deal is separate from the prior deal that
Correct.
You talked about developing yourself. Okay, thank you. That's helpful.
Yeah, you got it.
And that concludes our question and answer session. I will now turn the call back over to Scott McNeely for closing remarks.
Yeah, thank you, Rob, and thank you everyone for joining us this morning. Again, we were very happy with how the year wrapped up and are very enthusiastic about the tailwinds of our business stepping into 2025. We look forward to sharing just more of our wins and successes with you through the course of this year. To the extent there are any questions or any follow-up discussions would be helpful, please feel free to reach out to contact@landbridgeco.com so we can get a call scheduled. Thanks again. We hope you all enjoy the weekend.
This concludes today's conference call. Thank you for your participation. You may now disconnect.
There we go. Another earnings call. And as we cover LandBridge, we can see the markets are still selling off. Down and down and down she goes. It's very frustrating right now. It's tough. I know how hard this is. It's horrible. Absolutely horrible. We've got no sense in the markets whatsoever. We've got chaos. Oh, it's tough. No question about it. It's uncomfortable. No doubt about it. 1 minute we're up, next minute we're down. There's nothing here to do in investing. This is just awful. A lot of people getting wiped out. A lot of people losing their pensions. A lot of people losing their jobs. Threats of terrorists, threats of wars. It's tough. But this is the only way you invest. This is it. This is what the stock market is. This is the very nature of it. It's very, very difficult, and you cannot beat the markets. We are up against everything right now, and all you can do is do the best you can. If you can't stomach it, don't use margin. Just get out, maybe leave your money in cash. It's a hard time for everyone. Anyway, that being said, let's go to the comments. We've got a premiere coming up in a couple of moments' time. To Jerry and Elba. Thank you, James. Update. He is still sleeping. Thank you, Elba, for the update. Appreciate that very much indeed. Blessings, Sir Judah. Good morning to you. Keep strong, Elba. We will pray for you. Thank you, everyone, for Eugene. God bless Jerry and Elba. God bless you and Martin and the Lucas Ace family, and may the channel continue to be blessed and grow. I'm continuing to pray for you both, Jerry and Elba. Morning and good luck, Kevin B. Morning all. James 007. We keep on bleeding. Hello, good afternoon. Yes, it's very, very, very unpleasant. There's no two ways about it. It's difficult. It's difficult. It's not nice. Right, folks, it's time to go over to our premieres. We have some analyst videos I've just recorded for you. They are looking at some new stocks. These are requested by our Lucasades, our members. And you can see, I can just close the poll for the moment. The poll today said, is this a buy, hold, or sell for you? LandBridge, you said it is 33% buy, 28% undecided, hold 25, and 11 are selling. Okay. In the chat right now, you can see pinned to the chat is the next event. It's a world premiere in 15 minutes. Greg's world premiere. You might like to, I can see what you can see on the screen, folks. Yep, I can see it. I can see it. I'm an investor. I believe in investing. I believe in staying in. I believe in backing the economy. I believe in building. And I'm being punished big time for that philosophy. It's a world of trading, scalping, shorting, lying, deceit, disruption, noise. Difficult for someone like me who just wants to stay in, keep buying, investing, working hard, and then getting punished for it. I could have sold all this for a profit. I could have shorted the market. I said we'd go for a difficult time, but I just keep digging the ditches. I stay in. Not nice. Not nice at all. I hope it stops, but it is what it is. You're an investor or you're not, and I am. So tap the like button. We're about to go over to our world premiere. Hopefully you'll join me for that. Consider subscribing as we watch all this pain unfold in front of us. Deceit and awful situation. Right, the next event is coming up in just 14 minutes. This is the world premiere. This is where we're going to be in a few minutes' time. The link is in the chat. It's Greg's analysis. Then we'll go to another live premiere comparing the S&P 500 VOO to QQQM analysis on that. I'm going to give you the link again here in the chat. There you go. There's the link in the chat. There you go. You've got the link now for this event. It's about to go live in just a few minutes' time. I'll stay with you just for a few moments. You can see we're growing. We're 72,620 subscribers. Thank you to all of you who are supporting me. Many people now aren't watching. Numbers are going down. People don't like the red days. They don't watch. They don't engage. I stay in. I dig ditches. I get to work. I know it's horrible. So I've got time actually. Broadcom. I did that. That's for tonight. I also want to record this then. Pain. Let's record this at 8:48. 8. Deep breath. Right. Okay, I'm going to record this, and then I'm going to send you to the how many reviews will you be doing today? Or at least 2 or 3. Yeah. But the premieres have to come out first. The premieres have to come out first. The ones I've already recorded, so I can't be live and premieres at the same time. Nothing would get watched. You'd be competing with yourself. So I've got just 10 minutes before the premiere, so let me do this. Pain. I'm feeling it. This is horrible. No one's enjoying this. Look at how much money we are losing. $9,000 in a week. You can see it. $13,000 in a month. I left home at 16 and I'm a man who's done it all on my own. I've not ever had any money. I've had to work for everything. No one gave me any money. And this is a lot of money to be losing. But of course, we're not losing until we sell. I'm feeling pressure. I'm feeling stress. It's horrible. It goes against everything I believe in. The lying, the manipulation, the noise, the chaos, the upset, the wars, the drama. It's a very, very painful place to be right now investing. But there are 2 ways you look at this. There are investors and there are traders. There are those that short markets to try and drive everything down to zero to make money for themselves. There are those that get up every morning and work, dig ditches, invest, keep going, keep investing, keep believing, keep doing the right thing, supporting the economy. For those of you that want to trade it and ruin it, those of you that keep dumping it, those of you that keep selling it, we've got to stay in. We've got to work together. All the noise of tariffs, constant noise just to create drama, to drive markets down, just so those with money can buy it up again, just so they can dump it again. If you are investing right now, like me, you are an investor. You build things. You work hard for your money. You work hard. You save. You don't spend. You invest. You are propping up the economy. You are building the economy. You are providing it with liquidity. For you, like me, it's hard. It's tough because most people just don't care. They dump it. They get out. They short it. They manipulate it. They create FUD. They create noise. So what do? Do we become a trader and a gambler and then just drive everything down, short everything, sell everything? And then, of course, we want everyone to buy it back so we can make money, be selfish and be greedy. No, that's not for me. But that is the way the world works, sadly. I'm an investor. I'm going to keep investing. When the markets go down, I keep buying. I work harder. I earn more money to buy more. Of course, there's a limit to that. Eventually, you run out of money. Eventually, if the stock goes down 50%, 60%, you get margin called. You lose everything. But what can you do? If that is your mindset, if your mindset is about working, building, staying in, supporting the economy, that's who you are. And that's who I am. I've been that way all my life. I like building things, making things, believing in things, investing in things. And that's what I'm doing right now. I'm doing it with every fiber of my body. Every part of me is working as hard as I can. This is horrible. This is stressful. At some point, it will stop selling. At some point, it will hit the bottom. No one knows. No one knows. Everyone likes to say, everyone likes to come on and tell you, you're wrong. They know. They know when the bottom is. They know what. No one does. No one does. At some point, it will hit the bottom. And when it does, and the money returns, it'll go up as fast as a rocket. You won't believe how quickly it will go up. Bull markets have always, since the beginning of time, been stronger and lasted longer than bear markets. Those that try to drive everything down, short markets, sell everything, they lose long term. They might be winning this battle right now and thinking it's great to short companies, sell everything, while those are trying to build and grow and work and invest for their benefit too, because when it goes up, they'll want to buy back in again. Why is it going to go up? Because people like me don't sell. People like me work hard and buy the dips. But it's tough. I'm not going to deny it. It's tough. You're going against everything. It's the way it's always been. It's always hard to do the right thing. We don't know when the bottom's going to come, but we do know it's going to come. And eventually, those that short the market will be wiped out. Those that go against everything will eventually lose. And those that stay in the game will eventually win. But between now and then, you have to face the scourge of it all, the noise, the drama, the constant chaos. Wall Street now are going to war with Donald Trump. I've read information that supports this. They do not agree with these tariffs. 1 minute they're on, next minute they're off, next minute they're on, next minute they're off. It's creating chaos. People are hoarding. People are importing too much to get round the tariffs. It's creating an imbalance. It's creating chaos. And they're punishing the policies. They're selling the market. They're dumping everything. And then retail investors are getting fearful. I don't know how many retail investors will be left at this point. Most retail investors are over-leveraged, like me. Perhaps. However, I'm very structured. I'm very disciplined. For me, I will be the last to fall. Of all the retail investors, I will be the last to fall. I am the captain of the ship, and I will be the last to get off the ship. Absolutely. I do what I say what I do, and I face it, I deal with it, I keep working, I keep investing. Only so much I can do, but I will be the last one to fall. You will see me here as the last retail investor. And just as the last retail investor leave the field, that is when, as it always has been, all through history, that will be the moment the markets go up. No doubt about it. It will happen. A good day will come. And when it comes, are you in or are you out? Did you last the course? Were you part of the problem? Did you drive the markets down? Did you short it? Did you dump everything? I don't always agree with it. I don't like it. I think people who get up in the morning with the intent of driving markets down, manipulating things, spreading FUD, I don't particularly like that type of person. I don't. I'll be honest with you, I don't like it. But it's the game you play. If you come into the stock market, this is the game you play. If you don't want this, you don't use margin, you don't invest, you just put your money in the bank and earn 4%. That's what you do. But if you're trying to grow and trying to invest, these are the pains and stresses you have to go through. There it is. I'll be the last one standing. I'll be the last retail investor left. No question. I will go to the very, very end. I'm investing in the best asset, the most unvolatile asset as it happens. You wouldn't believe it, would you? There it is. Just a few more days to go, 2 weeks to go before I get paid again. When I get paid, things will get a lot better. And then I've got to go another month and I'll stay in the game. That's it from me. Click above my head for all the links down below in the description. Over here and over here for more videos you might enjoy. I'm not going anywhere. I've been here through the up days and the down days. I'm not going anywhere. I wish everyone the best. Until next time, take care of yourselves and each other. Right, world premiere time. You've all got the links. I'm going to prepare some more videos. I'm going to earn some more money. I'm going to dig some more ditches. It's a tough world. It's unfair. It's horrible. This is the worst start to any presidency, apparently in history, on the stock market. But apparently, it's the greatest start ever. Doesn't feel like it to me. Numbers don't tell me that. There's the link in the chat. We've got 2 minutes to go for our world premiere. Please join me. It's live conversation, live chat. All these premieres are live, so you can chat live in the chat together. There are live polls. There's live conversation. Join me as we watch our next live premiere. It goes live in 60 seconds. The moment it goes live, I'll end this stream and send you all there. Let me just double check. I know I've done it, but I like to double check. There you go. $60 seconds to go, and then we'll start the premiere. Let me just read the comments while I've got a few seconds. SPXL, there's better than VUSA. It's a tiny difference, really. It's just slightly cheaper. Hi, Martin. Investors stay strong, focused, and determined with their investment strategy. Tim, I'm with you, mate. This is hard, though. This is hard. I love Vanguard, says Pascal. Good morning, everyone. Good morning, Craig. Yes, be a trader, Martin. Investing is for people who don't know how to trade. You do. You would make a lot more buying the dips. I am buying the dips. I'm just not selling. I believe in building and staying in. I believe in adding more. I believe in building something, not merely just robbing off each other. We have been through the rough dips and rips in crypto. Just hang in. Fully invested. Now got to wait for the next payday check. I feel sorry for everyone who fell for Trump's lies and voted for him. That says DJ Hayes. Leston Wynn says, I don't think he lied, unless I missed something. Sorry at work. So quick text. Nothing is forever, Martyn. We will be fine. Martyn, don't stress, buddy. It's going to go back up quicker than it went down. That's right. As long as you can survive it. Trump and Elon are shorting and laughing. Right, the premiere is about to begin. And we're going to go and have a breather. It's tough. I'll see you back in a few minutes' time. Go and please join me for the live premieres, the live chat. One will take you to the next one. I'll see you back in a bit. Stay in the game. It's tough. I'll see you on the live premieres. There's a few of these, and when they're all done, there's 4 premieres. When they're all done, I'll be back with a live stream, and we'll continue where we left off. Everyone, take care of yourselves and each other.